Very good afternoon, ladies and gentlemen. I am Saurodeep Sarkar, the moderator of this call. Thank you for standing by and welcome to Hindustan Unilever Limited December quarter 2012 earnings call. For the duration of presentation, all participants' line will be in listening only mode, and we will have a Q&A session after the presentation. I would like to now hand over the conference to Mr. Dinesh Thapar. He's the General Manager, Investor Relations. Over to you, Mr. Thapar.
Thank you, Saurodeep. Good evening and welcome to the December quarter results conference call of Hindustan Unilever Limited. We have this evening with us Mr. Nitin Paranjpe, CEO, and Mr. R. Sridhar, CFO, on the call from the HUL end. As is customary, we will start the presentation with Sridhar sharing aspects of our performance in December quarter and then hand over to Nitin for him to share his perspective on the business performance. Before I start the presentation and hand over to Sridhar, I would like to draw your attention to the safe harbor statement included in the presentation for good order's sake. Thank you, and over to you, Sridhar.
Okay, Dinesh, thank you very much, and to everybody on the call, thank you for joining in and welcome to our third quarter results call. As Dinesh outlined, I'd like to just share with you a brief reminder of our strategy, a little bit about the operating context, and then dive straight into the details of our performance. If you can have the next chart, please. While the next chart is coming up and you are looking at the screen, which has a rather attractive image of one of our most recent innovations. In fact, a product that we brought to market in December quarter, making an entry into the premium hair oil segment with Dove Elixir, and I'll talk a little bit about that as we go through the presentation. Just waiting to ensure that the technology moves the charts forward in sync with me. Since some of you might be wondering what's happening, it's just the technology seems to be playing a few tricks this time around, and therefore you might see a little bit of latency in the charts progressing. So you see up on the screen the safe harbor statement that Dinesh drew your attention to, and I request you to take note of that. Can we have the next chart, please? So in terms of the sequence of or the agenda for the conversation, first thing, the strategy, I think just want to reinforce 2 points. First, our strategy remains consistent, which is the Compass strategic framework. You've seen that before. The other part that I'd like to call out is that the goals that we are seeking to deliver also remains consistent, which is to deliver growth that is consistent, competitive, profitable, and responsible. We will drive our strategy and deliver these goals using the framework of the Unilever Sustainable Living Plan, which in many ways is the new business model. So all of this remains the same, but I think it's worth reiterating and reinforcing. Next chart, please. Coming up, hopefully you'll see on the next chart is a few words to set the context in which December quarter played out for us. FMCG markets sustained levels of double-digit growth during December quarter. As I pointed out in our September quarter results, the growth in discretionary categories which had shown signs of slowing in September quarter, that trend, I have to say, continued, and therefore when we look at the second half of calendar year 2012 and look at the growth of the discretionary categories from a market context, they are noticeably slower than the first half of calendar 2012. In terms of channels, modern trade retail growth has slowed down significantly during December quarter. Up until September quarter, we had seen a regular pace of store expansion, and in a long time, this is the first quarter where the net store expansion is actually negative, which means on a net basis, we've had store closures in the modern trade retail channel. Overall, input costs held firm in the quarter. We saw a mixed picture across commodities. As the chart says, tea prices moved up very, very significantly. Rupee was around the levels of 54, which is 3 rupees higher than the average that we saw in December quarter 2011. Crude oil was steady during the quarter, while PFAD or palm oil showed clear signs of softening. So in the aggregate, I would say input costs held firm. Similarly, in terms of competitive intensity in the media space, this was sustained at high levels during the quarter. Next chart, please. Just to share with you a little bit of detail when I talked about the input costs, and you can see on this chart 4 key elements that we've used to give you a flavor of what's been happening on input costs. First, in the blue sort of box, crude has remained steady in the range of 109 to 110. But if you see the green box below, rupee dollar exchange rate, while it has been steady between SQ and December quarter 2012, vis-a-vis 1 year ago, clearly there has been a 6% depreciation. Tea, as I mentioned, has shown an upward swing, and you see on the chart premium North Indian tea as one reference point. The same is true for the overall North Indian tea as well, while palm oil clearly showed signs of softening in the quarter. So overall, input costs held firm. Can we have the next chart, please? In this challenging environment, our December quarter results reflect consistent and broad-based growth alongside profit and margin improvement. Our domestic consumer business grew by 15% during the quarter. Underlying volume growth was at 5%. Overall, our HPC and foods and beverages business more or less grew in the range of about the aggregate consumer growth. Rural channel growth sustained, while modern trade retail slowed down, as I mentioned earlier. The canteen stores channel, which had decelerated in September quarter, had recovered during December quarter. Looking at the operating margin, we have expanded operating margin by 40 basis points. This is now the 6th consecutive quarter of operating margin expansion. Cost of goods sold was up by about 40 basis points, which was driven by both currency and cost, but partially offset by a strong focus on cost savings. In terms of advertising and promotion, we continue to maintain the competitiveness of our spend with an increase in absolute spends of about 130 crores, which translates to about 100 basis points of percentage of turnover. Within the A&P step-up, a significant segment of step-up was in hand soaps and detergents. Profit after tax was up about 15%, while net profit after exceptionals was up 16%. Can we have the next chart, please? If you look at our segmental growth, as I said earlier, you can see broad-based growth across the 4 segments. And as we go into the details of the categories and the segments, I'll talk a little bit more in detail. In the aggregate, if you look at our growth across soaps and detergents, personal products, and beverages, these are in line with or ahead of the growth levels that we delivered in the previous quarter. Packaged foods growth is a little bit lower, and I'll talk about that later. Can we move to the next chart, please? Clearly, innovation is a very key driver of our growth, as is in-market execution. During this quarter, we had several innovations, some of which are shown in this chart. We launched a color-changing version of Lifebuoy hand wash that helps consumers, and particularly children, to understand when the germs have been killed, how much they need to wash their hands, and when the germs get killed by looking at the change in color. As I referred earlier, we made an entry into premium oils, the premium hair oil segment, with Dove Elixir, which has real ingredients and delivers the benefit of overnight oiling in nearly 30 minutes. In our hair portfolio, we had a new variant introduced in Sunsilk, while for the first time we brought to market the Bill Cream hairstyling range for men. In our skincare portfolio, we launched the Vaseline Germ Safe Skin Jelly, while in our foods business, we have relaunched Knorr Soupy Noodles, albeit that this relaunch has taken place pretty much towards the end of December quarter. Can we move to the next chart, please? I'll now spend a few minutes walking you through the details of the performance of each of our key categories. Can we move to the next chart, please? And I'll start with skin cleansing. I think skin cleansing as a category has been growing robustly for many quarters now, and this quarter is no exception. We've seen broad-based growth across the portfolio and across segments. Our premium segment continues to grow well. Lux and Lifebuoy had one more quarter of solid performance. At the same time, with an eye to the future, our liquids portfolio has been extended, as I referred earlier, the launch of Lifebuoy Color Changing Hand Wash. To aggregate, really pleased with our performance in this category. Can we move to the next chart, please? Coming on to home care, growth clearly was led by the premium segment. In laundry, all our formats grew in double digits. Our momentum on the premium portfolio behind Surf and Drill continued. Surf was clearly buoyed by the relaunch of Surf Excel Easy Wash, while the Win growth was led by a step up in bars. In our mass market portfolio, which is Wheel, we have taken actions to accelerate growth of Wheel going forward. In our household care business, we continue to deliver robust growth performance led by Win. In particular, Win growth accelerated on the back of a strong performance on the liquids portfolio. Can we move to the next chart, please? Coming on to skincare, and you will recall my previous reference to our observation that some of the discretionary categories we are seeing growth moderate. Skincare, and particularly face care, is one of these categories that we are seeing slowing pace of growth in the market. In this context, we have delivered double-digit growth led by Pond's, Vaseline, and Dove. Pond's Age Miracle continues to deliver strongly, while our hand and body lotions through Vaseline and Dove performed very well. Fair and Lovely, which you know was relaunched in June quarter, has retained its strong position post-relaunch, albeit the issue of transition from the 7 rupee price point to the 8 rupee price point in sachets is continuing. This is something that you will recall we mentioned last time, based on past experience, takes a few quarters to pan out, and therefore not really surprised with the outcome in December quarter. I referred earlier to the innovation in Vaseline. So that's about skin care. Can we move to the next chart, please? Coming on to hair care, our category delivered double-digit growth led by premium formats. Across Sunsilk, Clinic Plus, and Dove, we had very good growth in the bottles format. We launched Tresemme towards the second part of September quarter. Really pleased to share that we are seeing very good positive results and good momentum behind this launch. Again, in terms of building segments and markets for the future, our hair conditioners portfolio continues to demonstrate strong growth with further acceleration in growth in this quarter. And as I called out earlier,